Economic slowdown, one more reason. After our GDP numbers came at 5% in the month of August 2019, media started portraying as though India has reached its end on its growth story. Though government took a lot of initiatives, not much were seen happening fast. Now in a week's time, we will be having next set of GDP numbers coming, and for sure that is going to be down. Media will have a merry time forecasting or broadcasting negativities. People will see those creativities and get more depressed. There are various reasons why economic slowdown happens. If it is going to be permanent and will take a long time to rejuvenate and get back, that can happen only when there is a natural calamity, riots, or some reasons which is beyond man's control. Even in those situations, world has sprung up to vigor and got back to normality. Whatever is happening in India is not such kind of a situation. It is a normal cycle of activity, one that happens in any business, even in our life. Like how after every dawn there is a nightfall. When you are told that there is a likelihood of a recession, it's not that recession is there, it is just anticipated. What do? You cut down on the expenses, right? It is normal because we want to ensure that we have enough money in case of any eventualities. Like you, if many people do the same, what happens? Consumption slows down. A recession which was anticipated now becomes a reality. When consumption slows down, usage of commodities like chemicals, metals, oil, etc. drop. Commodity prices go down. As an immediate effect, businesses have lower sales, salary hikes get reduced, people get fired from jobs. As a regular event, everything follows. When do this anticipation of recession thought come in? After every big growth, there is some kind of a pessimism setting up in people's mind. This is because of fear that anything that is too good ends up being not so good and we should not celebrate it too much. Major part of the globe or people's mind across the globe have this kind of thoughts. Where does all this start? Media. They bombard people's mind with negative thoughts and bring fear in their mind. If you happen to spend more time before your television, chances of your life getting ruined or investment not doing well is for sure. When most of the citizens begin to save, something else also happens. There is a build-up of savings and that money has to be invested. Where do we invest? In the safest asset, so that money is available at a later date, right? So, which is the safest investment? Ask this question to any group of people. Answers will be surprising. We did this exercise with about a group of 80 people in the age group of 30 to 60, and this was the answer. The safest assets they talked of was fixed deposits, bonds, currencies, gold, and equities. 16 of them told fixed deposits are the safest. Then another 16 told gold is the safest. Similar percentage told bonds, equities, and currencies, which comes to a conclusion that none of them are safe, because when one group believes something is safe, the same group believes all the other are risky. Like that, it continues with all the groups, and everyone assumes 1 is good and 4 is bad, and this percentage is equally distributed. You can do this exercise with your own groups and you will see the results are almost similar. Let's look at some examples. Taking each and every asset class. If more people invest into fixed deposits, banks will have more money and industry is not borrowing that much money from them. What banks will do? They will reduce interest rate so that they get lesser deposit. Out of about $65 trillion of money being invested in fixed income across the globe, $18 trillion, which is almost 30% of the total investment, is now in negative returns today. That is, if you invest 10,000 as deposit in your bank, after 1 year they pay you back 9,500 rupees. Instead of paying interest, banks have now started charging for safekeeping of the money. This is done to discourage people from investing in bank deposits. In Denmark, for the first time in the history, banks pay you money when you take a home loan. That is, if you take a 1 crore home loan, the net EMI payout after whatever years you are taking to pay back the bank, your net payout will be 99.5 lakhs. Banks pay borrowers to encourage them to borrow from them because so much money is lying idle in those banks. The next safe asset that was discussed was bonds. When more people invest into bonds, which has an inverse correlation to interest rates, that is, when interest rates go down, bonds go up in price. There will be huge investment and big demand supply mismatch which will bring stagnation in the growth. The third safe asset was currencies. Think when more people invest into currencies, here it happens in the US dollar because that is the global currency. When US dollar goes up, local currency goes down. In 2007, one unique situation happened across the globe. Standard & Poor's, or S&P as it is called, one of the biggest credit rating agencies in America, downgraded US economy. When this happened, fund managers across the globe went into panic. Think what a money manager sitting in India would have thought when this news hit him. In his mind, he would have thought, when the world's biggest economy is going to go down, India will have an even bigger impact. So he would have sold Indian rupees and bought dollar. The similar action, if it was taken by all the managers across the globe, they will sell local currencies, that is, all the local currencies will go down, US dollar will go up, thereby impacting their imports and bringing a mismatch in their economic growth. A recession which was anticipated will become a reality in US. The fourth safe asset that was discussed was gold. When more people buy gold, eventually gold price will go up and dollar will go down. This is because of safe haven status that gold enjoys. And inverse is also possible. When dollar goes up, gold goes down. This is because when there is uncertainty in the global economy, people invest money into gold. When everything is in calm and cool status, dollar goes up, gold will go down. So there is no certainty that gold will always be a safe investment. When both gold and dollar go up, that is one more unique situation. It gives indication that global recession is setting pace. We are in that condition today. The fifth safe asset that was discussed was stocks and mutual funds. People who believe in stock markets invest their savings in stocks. When more money comes into stocks, stock prices go up, valuations get stretched, and correction sets in to bring the prices to a regular valuation. If you observe clearly, each of the safe asset, the so-called safe asset, is very closely correlated. Nothing is protected and nothing is safe. Each one drags each other in their growth. So it's only a perception in the people's mind that what they think is safe, and money gets distributed equally. Consumption slowdown and the concurrent occurrence of all the events that follows happens as a cycle. It cannot be controlled, and at the same time it cannot be avoided. What has a substantial growth has to come down. Aggressive growth have to slow down, take rest, and then continue on its journey. Let's look at a simple example. Say you have a 8-hour work, a very good flow of life and good earnings. As a natural process, you look for a little extra growth. Opportunity comes to you with say about 2 hours of extra work and extra money getting paid. You are happy about it and you want further more growth. 8 becomes 10 hours, 10 to 12 hours and 14 hours. You are happy about it and you want to continue the same. How long do you think you can continue? Not for long, right? Because once you stretch, you get exhausted and you want to take rest. After you take rest, rejuvenate yourself, get more energy and come back, your flow continues. If you don't do, you are exhausted, even your 8-hour work is becoming difficult. Same thing happens with the economy too. We stretched a little extra from our regular growth and reached 8%. After that, we slowed down, getting back to normal. Now, economy is in relaxing mode. That's where we have reached the 5% growth. From here, after the slowdown, economy will get a booster and it will start going up again. When inflation and GDP go down, that is an indication that the economy is bottoming out and next is going to be the revival. We are in that condition today, and only when both GDP and inflation is down, that government will listen to industry's requirement. Corporate tax cut was because of that. It was a dramatic decision which is going to bring 33% compounding growth to our country. Imagine at 33% growth where we are going to be in the next 10 years. If in 2 quarters from now our economy is not going to revive, personal taxes will be tweaked. Government will give more money into the hands of people and urge them to spend. We will have all these happening in the next 6 to 8 months in our country. 2019 is going to be one of the greatest years in Indian economic history, like 1991. Before 91, we had only a handful of billionaires in our country, like the Tatas, Birlas, Ambanis, etc. After the visionary decisions that happened in 1991, we got the Narayana Murthis, Premjis, Nadars, Nilkanis kind of billionaires coming up in our country. 2019 will create more and more billionaires. If you align all these thoughts or events, you can see a vision that India will be the next world superpower. Next boom year for the market is 2021. Get prepared to participate in the upcoming boom, which is going to be a lifetime event in our country. Thank you.